Thank you for the council's invitation to come and make sure that all of our constituents are aware of recent changes in the exemption program for reduced property taxes for persons with disabilities and senior citizens. Kind of an appropriate day, a lot of the discussion about affordable housing. We don't want anybody to be forced out of their existing home due to inability to keep up with property taxes. And so that makes it important. And also, your earlier presentation to Vietnam veterans, we serve many veterans in this very program. So I'm counting on Mr. Weinsbury to help me move through this. That's the title thing, and we'll go right now to a nutshell summary of what it is we're talking about. This is a tax exemption program open to seniors and persons with disability who have limited income by state law. This initiative significantly reduces property taxes in your primary residence by freezing value for tax purposes and exempting you from all excess levies and the state school levy number 2. The Assessor-Treasurer will continue to establish the market value of your property annually, but your taxes will be calculated on a frozen value unless the market value should somehow miraculously drop below the frozen, which has not happened lately. Eligibility hinges on 4 factors: age, disability status, one of those 2, plus home ownership, home residency, and your income level. So the next slide. Eligibility, again, to summarize this quickly, you have to be age 61 or older in the previous year, the year you have income information to submit. So we're talking about the 2023 year for a 2024 tax partial exemption. And also, if you're not 61 at any age, if you've been awarded disability status, for veterans it used to be 100% disability to qualify. It has been lowered to 80%, which brings in a lot more veterans than we used to have. Or if you're not a veteran but you are disabled, if you're fully disabled and unable to work and you would furnish some sort of medical statement to that effect, then you also qualify at any age. Secondly is the income, again, for the 2023 year. This has increased dramatically. Previous years, it's based on a percentage of county average household income, and it was $45,708. This year, it's greatly increased the percentage. They've recalculated, and they've also rounded it off, which really helps our work a lot too. So now the new number has jumped 20%, or actually 40%, excuse me, to $64,000. And then the next question is the combined residency and ownership. This exemption is only good for one property in any state. You can't have one here and say one in Arizona or Hawaii. It's one, and it has to be your primary residence, meaning that for 6 years and a day out of the year, you are living in that house, and so there's only one of them. Next slide. While you're receiving the exemption, we mentioned the value is frozen. Every year, we send out a revaluation notice in June, and you'll see, if you qualify for this program, 2 values on there: the current market value that our appraisers have placed on it, and then also the frozen value, the lowest of which becomes the number used to calculate your property taxes for all the various taxing districts in the area where you live. We have status change forms online because it's your responsibility. Once you get this exemption, it's good for the next 6 years. However, if your situation changes, then you need to notify us. Otherwise, you could end up having to pay back some taxes, and we don't want to go there. Processing time, we want to alert you, depending on the time of the year, it can take time to add up all the exemptions and possible deductions, get all the attachments that need to be there. We need to have a real package to make sure that this is done fairly and accurately according to state law. So right now, we're finishing up February applications were really in pretty good shape, and this is thanks in part to the council adding a staff member to our budget. Instead of 4 people doing all this work for the whole county, we now have 5 people, so it's helping a bit. But the other things we've done is streamline our systems so that we can move faster. But we caution you that when everybody is filing their IRS forms by April 15th, that's when they'll have all the information they need from the previous year to submit to us, and we're expecting a flood of new applications. And I've already mentioned that the renewals are also a part of the job done by those 5 people, so we renew a part each year. And next slide will show you how that works. I mentioned you get this exemption for 6 years, and what we do is take some letters of the alphabet, your last name, each year, and do the renewals. So we have about 11,000 currently in the county. We expect to end up with thousands more with this great increase in the income limit allowed. But we have to look at 1/6 of them every year to make sure that they re-qualify after the 6-year period. So it actually might be less than 6 years before your letter comes up in the alphabet, is what I'm trying to say. And so this year we are doing D, E, F, and G in the alphabet and so forth. Next slide. What happens if you no longer qualify? This can happen for just 1 year, for example, if you sold something you owned and had a significant amount of income, because it's based on income, not how much money you have in the bank or even how much money you have in investments, but what you draw out in the course of the preceding year determines whether you qualify. So if an event like that happens, or you win the lotto, you notify us, and it might be just for 1 year, or it might be you no longer need the exemption because your conditions have changed. Washington State also has a deferral program, and I have to mention this. It always creates confusion. Over the weekend, I saw on the Nextdoor app online, a whole group of people had started talking about this. There's a new income limit, and somebody was trying to be helpful, said, yeah, but when you move or die, it all has to be paid back to the state. Not true. There is a program where the state will pay your second half of your taxes each year and charge you a small amount of interest, and at the end of ownership, however that occurs, they do have a lien on your property and collect it back. Well, as soon as we say the word lien for somebody who has worked to pay off a mortgage for 15 or 30 years, they see red. They don't want to have anything to do with it. As I mentioned, we have 11,000 of the senior and disabled exemptions. We have about 200 in the county of those people who are on the deferral. It's just not popular, but I do like to make the distinction so people know this is not going to have to be paid back at some later date. Next slide, we'll see the income categories and how they have changed. I mentioned the $64,000 figure. Without getting too deep in the weeds, there really are 3 levels, and they result in greater levels of exemption as your income goes down. And we are talking about a gross income. Another thing that was on that website this weekend was, oh, it's your adjusted gross income off your income tax. Adjusted gross has other deductions that we may or may not allow, but we have a list of medical deductions that I'll mention in a minute. But this is your gross household income. From $64,000 down to $55,000, as mentioned, you pay no voted taxes such as school levies or bond issues, and you also don't pay the McCleary second state school levy that was created a few years ago. So this just about cuts your taxes nearly in half. It's going to be at least a 40, probably up to a 50% reduction in your taxes. The next category is if you're actually below $46,000 down to $55,000. Well, I'm saying that backwards. $55,000 down to $46,000. You are exempt from 35% of your home's assessed value. We do not tax the full value of your home, only about 2/3 of the value of your home, in addition to all the things I mentioned before. If you're below $46,000. And if you were paying close attention, everybody last year who had an exemption has now dropped to this lowest level because they're all below $46,000. And there we take off 60% of your home's assessed value when calculating the taxes. So you're going to pay very little property taxes if you're at that lower level of income. There is an example here. Take a $500,000 home, which is fairly average in Pierce County, and tax rates have dropped as the values have gone up. We've talked about that in previous sessions. Our current average rate in the county, adding all the different property taxes together, is $11.10. So the tax rate of $11.10 multiplied by the value of $500,000 would give you a tax bill of a little over $5,500. The reduced levy rate, instead of being $11, would be $5.67, and that reduced rate based on your income categories, in the first category we mentioned, the $64,000 or less, would lower it to $2,800 instead of the $5,500. The second category would lower it to $2,400, and that third category down to $1,100 for the year's property taxes on a $500,000 home. So that kind of helps you to understand how this is a big change that has occurred here. And next, I just want to go through these kind of quickly. It is easy to find our application online. We now have fillable forms online so that you do not have to simply print off an application, fill it all in, and then bring it in or mail it in. You can do it all online using a fillable form, and there's a place to attach your tax statement and your bank statement and anything that is required to make sure you qualify. So our regular Pierce County website, piercecountywa.gov, and if you put a slash behind that, ATR for Assessor-Treasurer, you would get to us real quickly. Or on the main Pierce County website, if you click on Property Search, which you see circled there, then next slide, it takes you to the Assessor-Treasurer's area, where we first explain what I'm talking about right now, and then to the left, you'd see you click on Property Tax Exemptions and Deferrals. And then there are various property tax exemptions and deferrals. Some people are aware of forestry and agriculture and open space exemptions. We're not worried about those right now, so you look down and click on senior citizens or people with disabilities, and here you are. That brings you to this information, which is where the fillable form is located, the property tax exemption program, and you click to apply online. And then here's what you'll see next. It takes you to the welcome, and it asks the very questions we've just been talking about here. Next slide is saying get started. Either you're a new applicant or it is time for your 6-year renewal, and you click which one of those it is and move on one more time. And then this is where you get the eligibility questions. Down at the bottom of the page, you see yes or no. Did you own and occupy this home as your principal residence for a minimum of 6 months? Well, you're going to click yes then. And then the next question, is your household income $64,000 or less? Yes or no. And of course, if you say yes, you're going to have other choices to determine exactly where you belong. Then is the question of age. Were you 61 or older by last December 31st? You say yes. And the other question is disability status, which would also be a next question I didn't really show here, but you don't have to be 61 if you're fully disabled. And next page here, we have the deductions. This just came in, I'm going to say about 3 years ago. It was a big change. We had a lot of people who said, well, I'm just over that limit, but hey, I had a lot of prescriptions. I had a lot of dental work. I pay for premiums for extra insurance. But I don't have that money to spend, so can I deduct it? And it used to be the answer was no, and now the legislature has brought in quite a long list of various deductions. Do you have any care given in the home? Any of those things that happened, did you have to occupy a nursing home for a period of time and pay that bill during the course of the year? and there are many more, but again, we allow the first $500 of prescriptions without any receipts or records of it. We just assume you had that amount. But if you had a lot of prescriptions, then you can save the receipts and get further reduction that could move you to a lower income category for a greater exemption. Okay, we're on the next slide. Mr. Weinsbury is doing a good job, and we're in the home stretch. What needs to be submitted with your application? This is where you would have to do the attachments. If you're computer savvy and can do the attachments, you can do all this online. Otherwise, just bring in these items, your proof of income, which usually is your IRS form, and then your driver's license. That just shows that this likely is your home address, since that's where you have your driver's license. And for disability, the proof of disability, the 80% VA letter or a letter from your doctor stating your disability. And it continues on the next slide. There are a number of other things that can come into play. We do have people who've placed their homes in trust. This gets a little more complicated. It doesn't mean you can't get the exemption, but we have to see what type of a trust it is that gives you the right to make that your residence for the rest of your life. And there's other details like that in many cases these don't apply, but in some cases we have to dig a little deeper. And that is the presentation. We put up here a lot of contact information. I want to mention what you just heard is the executive summary, if you will, of the seminars we're giving all around the county. Councilmember Denson has heard this 3 times now, and we're going to have a 4th one in a couple months. But most of you have had one. If you haven't, we're going through the council districts wherever we're invited and working with the SHAPE organization, the South Sound Homeless Affordability Accessibility Project. They've helped with a lot of this scheduling, and they're even bringing other social services staff from the county to these meetings that do serve senior and disabled folks so that they can get that other information at the very same time. But this is a lot of information. We're at the county annex. If it seems complicated, just come in and ask us to kind of walk you through it. We're glad to do that. But more and more, they told me just the other day, we're almost half of our applications coming in on the fillable form online. And that is speeding up and streamlining the process because, as you know, when you're on a fillable form, if you skip something or forget something, it will tell you you didn't fill that in yet. So we get more complete forms and don't have to go back out and recontact the public. And we're just very happy to be able to apply this state law to anybody in Pierce County who qualifies. So keep them coming. Thank you.